Well, it's great to have you with us. And as the markets are getting ready for the Wednesday trading session, broadly speaking, the world is watching the U.S. Federal Reserve. The American Central Bank set to deliver an interest rate decision this afternoon. No change in rates expected. It's the commentary from the head of the Fed, Jay Powell, that people are going to be watching very closely because, as you know, the markets have been jittery in recent weeks as traders have reassessed how soon we'll see interest rate cuts. Those increasingly have been pushed back. It's possible we'll continue to see a hawkish tone from Powell as he talks to journalists post-decision today, possibly even acknowledging that the Fed might have to be in a position where they would hike interest rates if the data suggests that is needed. Let's get some more perspective on all of this. Dennis Lockhart is former president and CEO of the Federal Reserve Bank of Atlanta and one of our regular guests here to figure out the Fed path. Dennis, great to have you with us. First of all, talk to us about the dilemma that the Fed is arguably facing right now. I mean, I guess if the economy is strong enough to hold off on rate cuts, that should be, in theory, a good thing. But the markets have been quite jittery. What's going on?
Well, I think it's a rather ambiguous time from an inflation point of view. We've had 3 months, the first quarter basically, of discouraging or at least sideways inflation readings. And I'm not sure the committee knows exactly what to make of it. It could be a stalling out. It could be the beginning of a reversal, or it could just be some bumps in the road on a path to further disinflation toward target. And so at this particular meeting, I think they have to take a posture of sort of balance and not over committing to any particular point of view.
So, like, people use these different words, such as being hawkish, the idea that you would be signaling that it makes more sense to keep interest rates elevated as opposed to moving towards cutting interest rates. What does that look like in tone, let's say, from Jay Powell if he goes down that path today?
Well, I think he might go ahead and repeat what he's been saying, and that is, in all likelihood, the next cut or the next move is a cut. That's been the mantra at recent meetings and in some of the Fed speak events. So he could go ahead and repeat that. I don't think that gets him out over a limb too much, and that will be interpreted as not so hawkish. Having said that, he has to acknowledge the inflation data and it's short term, but the persistence of discouraging inflation numbers, and so he may stake out a position that suggests that holding into the fall at least will make sense.
And what do you think? What do you think is the likely path, just based on the data in front of you?
I don't think we'll see anything in June. I don't think we'll see a move in July. I think September is questionable. It'll depend on the clarity of the data coming in. If I counted correctly, there are 10 inflation reports between now and the middle of September. If they all were to come in consistent and clearly on a path to disinflation, maybe September. But I'm much more inclined to believe that they will hold at this level until the November meeting or the December meeting.
Do you think there's any possibility that the Fed, if the inflation story is complicated, could actually have to raise interest rates, as some have suggested?
I've been saying, John, that it's a non-zero probability of a hike, meaning I don't think it's a base case, but I don't think you can take it off the table, and I'm sure Chairman Powell and the committee will not take it off the table either.
You know, Dennis, we're watching this from afar here in Canada, and it's complicated because consumer resilience in the United States has been one of the considerations here. We are seeing weakening consumer trends in Canada. Higher interest rates for deeply leveraged households has complicated the story for the Bank of Canada. which many expect by summertime to start cutting interest rates, but they would be doing so already with rates, I believe, 50 basis points below where the Fed is right now. And that becomes a complicated story for our central bank. If you start cutting, if the Fed hasn't cut, if there's sort of a currency risk there of importing inflation from the U.S. So how closely do you think central banks, whether it's Canada or around the world, have to watch what's happening in the U.S. right now, especially if they're seeing some signs of cooling in their own economies?
Well, certainly Canada has to pay great attention to Fed policy, simply because the exchange rate and the trade flows are very much a question of the exchange rate and interest rate differentials will drive that. Europe's going through something similar. They're signaling a cut in June. And it's all, as I said earlier, I don't think the Fed will cut by June. So they're going to engineer a divergence in terms of the interest rate levels. So I think while the Fed holds, the rest of the world's central banks have to pay attention at least to that and the risks that are involved.